This is the ARPA one-year overview reading for the year of 2025. It's currently January 7th, 2025, 9:22 p.m. Eastern Time. ARPA crypto at the time of this reading, just under 5 cents at 0.047812, and that's USD. The ARPA 2025 reading was created October 3rd, 2024, 4:54 p.m. Eastern Time. So if you're new to the channel, first off, guys, what we're going to go through in this video is the overall trend direction for the year of 2025. We're going to go over any significant events that help or hinder that trend. We're going to give you chart behavior that you should expect to see near the year's highest high or highs, and chart behavior that you should expect to see near the year's lowest low. And then we're going to go through week by week and give you the chart behavior throughout the entirety of 2025 for the timing of the highest highs, the lowest lows, the Discord trade alerts, the live updated trading view charts. All that stuff is part of our paid subscription. I'll show you guys how to get that at the end of the video. So stay tuned for that. And then as far as the scale, when I'm talking about big moves higher, lower, support, resistance, things like that, everything that I speak about is going to be on the scale of a one-year chart with one-day candlesticks, unless otherwise specified. All right, so let's get into it. The overall theme and behavior for the year of 2025 is going to be significantly mixed, with a couple of notable tops like that will stand out on a at least the one-year chart scale, but probably like on a multi-year scale. There should be at least two of them. And it's crossed with the Ace of Wands, indicating that there's significant upward movement at some point, at least once in the year, that'll offer on a multi-day scale or on a one-year chart scale, will offer you opportunity to close out of longs and open up shorts for probably for like a multi-year kind of trade. We'll look at that in more detail as we progress. I left out, we'll also be giving you one of the best trades that we see for the year of 2025 at the end of the video. All right, so behavior around the highest high for the year. We've got erratic behavior back and forth through the same price level. In the midst of that erratic behavior, usually you'll, especially in the high signification position with the pleasure card, usually that means that you're going to see the revisiting of a crest that was recently as past opportunity. When it's in the high signification for a one-year reading, it could be indicating we're revisiting a crest from the prior year, or more likely, it could be indicating that we see the high multiple times throughout 2025. There is also a possibility of revisiting lows with the pleasure card. It's just that seeing it in the high significator position indicates pretty strongly that we'll see crests. The fact that the high and the low are within close time proximity to each other does mean that there could also be some revisited lows, and we'll look at that as we progress through the reading. All right, guys, so I'm going to go into the week-by-week chart behavior. It's important to understand. Listen to this. This is very important. I'm giving you the sequence of chart events. The prediction is outlining the sequence of chart events. Okay? Timing is secondary. Now, our timing is usually on point to the week with a one-year reading, but not each card's energy will line up perfectly with 2 weeks of time, which is about how long each card represents. So you have to account for that. There may be plus or minus as much as like 3 weeks in some cases. I would consider that a bad reading, especially if it's more than once in a reading. But you have to give it like plus or minus 2 weeks of wiggle room on the timing in some cases. That's why I always stress the sequence of chart events. Follow the sequence of chart events. And we're going to show you how to trade this information. But I highly recommend only utilizing this public video for purposes of education and entertainment. If you plan to actually trade this information, I would not do so without the Discord trade alerts and live updated trading view charts. I've got 25 years of experience doing this, my friends. All right, so let's get into it. In early January, we have a prominent move higher, full retracement. We're going to check out that in just a moment and see how our January interp is holding up. But there should be a pretty big move to the upside, maybe in the first week, out of a trough. And then we have like this prominent move higher, full retracement, back to a trough probably mid-month. And then it looks like we have another rally into a peak or high for the month, probably around the third week. And that's followed by a sharp decline. Hard to say if it's into a low for the month. The low could very well be something that we come out of. And let's take a look at the January reading, or the chart for January, and see what's going on thus far. Right? So trough that we have this notable move out of, full retracement, right? Likely there's another move to the upside, but it's a little unclear if that happens. I think it probably does somewhere in the third week. And the low for January was also the Hermit card, indicating a decline to revisit support that we recently met as a past opportunity. I apologize for the lack of editing, guys. We are so backed up on work. And our timelines, our deadlines never change. They are hard deadlines, which means when we fall behind, it's a chain reaction of problems. So normally we've got very well edited videos. For probably most of 2025, they'll have to be this way until we get an editor. But it does look like we've revisited important support that we met recently. And it looks like it's the low for January, but it also looks like we revisit this low, like we see it more than once in January. Or maybe it's in February that we see it again. But either way, we revisit it again. And so decline through multiple support levels in the later part of January. The January peak will form at a near overbought crest or peak that we sell off from. And then there should be sideways rotation as we leave January, entering into February, with a big move higher, ending that sideways rotation probably the second week of the month. Volatility and a fast sudden move higher, ending that volatility, will take us into the February high, which will very likely be a prominent peak on a one-year chart scale. And then a sharp decline from that peak, so pop up into the peak, and then a decline pretty sharply from that peak. This is all looking like it's taking place towards the third week of February. Out of the February low, we have a rally increasing with momentum moving forward in time. And then in the later part of February, we have a crest that will sell off from down to and through a support. And then we'll do a U-shaped reversal, break through that price level to the upside, and then reuse it as support. Sharp movement to the downside again around the cusp of February, March. There's a rally into a key resistance in early March that we should then decline from with consecutively lower spikes up on the way down, and we should see notable sideways rotation near the March low, which very likely is a prominent low for the year as well. What do I mean by a prominent low for the year? So looking at a one-year chart, guys, if you guys are new to the channel, what do I mean by prominent low? All right, so here's a one-year chart, right? So what we have here this is what you would call a highest high. This is what you would call a lowest low. But this is a prominent high or a prominent peak, You could say this is a prominent peak. This is a prominent peak, prominent peak, right? Prominent trough, prominent trough, prominent trough, prominent trough. Also, lowest low thus far. Lowest low thus far, lowest low. Right? Does that make sense? Highest high thus far, highest high thus far, highest high. All right, hopefully that makes a lot of sense to people. Let's get back into it. So sideways rotation near the March low, which is likely after a sharp decline that'll really stand out on a one-year chart scale, taking us into a prominent trough around the third or fourth week of the month. The later part of March, we should see a brief peak that's easily missed, followed by a decline through multiple support levels. And the March high should be at a key technical price level on a multi-year scale. So look out for that, with a sharp drop out of that, on probably a crypto-wide decline out of that high. Also, probably a similar thing in the January high, looking at it now. All right, so we've got a sideways fluctuating decline that precedes a rally in the early part of April, a prominent trough on a one-year chart scale, and it looks like there's a notable move into and or out of the April high. It marks a significant trade opportunity. Usually the Magus card is indicating a good opportunity for an exit. Likely I'm going to talk about that, not always for an exit, but usually. Likely I'll talk about that as the best trade that we get into at the end of the video. We'll see. In either case, there's a really sharp drop. One of the bigger notable drops of the year. Doesn't necessarily mean it's to like a low, like a notable low over the year or something. It just means that it'll really stand out, taking us into the low for April. Out of that low, we have a rally along a diagonal trend line, breaking through horizontal resistance. I mean, another resistance, and then we pull back to somewhere between those two price levels. And there's an important price level in the later part of April where either we flatten out, or it could be that we're like coming back to price levels that we started the month of April with. Let's see. Hard to say, but there is another prominent trough there in the later part of April. So it looks like we have two troughs in April, or maybe that first one's more on the cusp of March, April. Remember, plus or minus 2 weeks in some cases. Now, we have a rally in early May. This should be a pretty significant moment in which we move to the upside in early May. I say that because it's very strong correlation to the crossing card, indicating there's some sort of event or chart behavior there. And it'll offer opportunity. We'll talk about in the total access version of this video. Again, I'll show you guys how to get that at the end. In May, we've got, for the May high, we have a prominent move higher through key resistance, and then a full retracement of that move back down through that same price level. We have we have price swings, not necessarily bearish, but we have price swings in the later part of May, and there's an important resistance on a one-year chart scale minimum highlighted near the May low. It's a resistance that we failed to break through many times before. So the price swings in the later part of May and into June, there's a crest like the end of the first week, beginning of the second week of June, where this rally will turn over. And we should have a decline that takes us to another prominent trough on a one-year chart scale at the June low. Out of a decline, there's a huge move from the bottom of the range all the way to the top of a range out, creating that June low. And when I say from the bottom of the range to the top of a range, that does not necessarily mean from the bottom of a one chart to the top of a one-year chart. It could mean just like an important range that we then need to push, like we need it, you know what I mean? Like it could just be an important range that needs to be like met. In the June high, which is likely in the earlier part of June, rally will be halted by a decline through key support, creating the June high. The later part of June, we have a rally along a diagonal trend line, ending with a fast sudden move higher, and then a breakdown through that diagonal trend line with increasing volatility on the way down. Likely some sort of notable move in the later part of June. So it's likely that the low for the month of June is in the later part of June, and we have this like big move to the upside out of it. We do have an important support level in early July. This is important. This will be important on a multi-year scale in early July, and usually it can be relied upon. It's not always the case, but usually it's the type of foundation that you can build support off of. We have an attempt to establish, it might not be the case actually here, because the July high, we have an attempt to establish support with sideways rotation. So we likely temporarily turn resistance into support there. There's a resistance in March, possibly in January, but in March that's likely to be revisited here in June. Yeah, so it looks like we attempt to establish support out of what was once important resistance on a one-year chart scale in the earlier part of July. There's some price swinging around the July high, and near the July low, we have a period of sideways rotation that'll end with a fast sudden move higher. Likely that fast sudden move higher is offering opportunity to open up a short. We'll look at that in more detail in the total access version. The later part of July, we have a prominent move higher, full retracement of the move, and a prominent trough. We have a lot of price change in early August and an important support level on a one-year chart scale minimum that's highlighted involved with that price change. What do I mean by that? Like a lot of ground cover between the starting price and the end price of like a lot of price change, right? The ace of discs can in some cases also indicate like back and forth behavior around that support level. Yeah, and it looks like it's to the downside. So we have this like prominent move higher, likely out of a trough in late July into a peak around the end of July or the cusp of July, August. And then we have like a full retracement and some into a August trough, also a prominent peak prominent trough for the year. There will be sideways rotation along key support near the August high, so that could be like a blending of the two, July, August, hard to say. We'll have a notable peak on a one-year chart scale that we sell off from into the August low, and the August low will be within close time proximity to a prominent trough and peak for the year. The later part of August, we have a decline that ends with a fast and move higher, taking us into a peak probably early September, out of which we have another significant move to the downside through multiple support levels. The September low is near, it's highlighted near an important resistance level on a one-year chart scale, likely that we decline from to meet the low and then we return to it, or to that resistance. The September high is within close time proximity to a prominent trough on a one-year chart scale, and there should be a period of volatility with a sharp drop standing out in that period of volatility. That'll kind of like be around, it'll probably form the high there for September. We have bullish behavior in early October, bumping along resistance sideways, possibly breaking through, bumping along some more. There's a full card opportunity at the October high. So something improbable, a lot of price change there. It's something improbable that offers like a major opportunity on a multi-year scale probably. And it may very well be like some sort of peak that forms there based on the abundance card in later October, which often is like a new high after making lows, or in some cases is a new all-time high. Hard to say at this time which of those it is. And then we have a notable reversal near the October low at a prominent trough, again on a one-year chart scale. Either multiple reversals or like a notable reversal that really stand out amongst other reversals throughout the year. I'm advised not to chase there's some sort of peak on the cusp of October, November, and advised not to chase a rally into that peak. Prominent trough early in November, big move out of that trough in early November. We have an important range on a one-year chart scale highlighted at the November high, prominent trough on a one-year chart scale within close time proximity to the November high, and a lot of price change into and or out of the November low, which also usually the Princess of Discs will offer a lot of a significant cash out opportunity of some kind. So we'll look at that in more detail probably when we get to the beginning of Q4. If you've got total access, then you can just ask me about it anytime to kind of like take another look throughout the year. All you got to do is go to the ARPA total access channel and ask as part of our total access subscription. Again, I'll show you how to get all that stuff, guys, at the end of the video. All right, so prominent trough again in late November with a fast sudden move higher out of that trough, taking us likely into 3 pokes through the same trend line in early December. The third poke through that trend line will be followed by a sharp drop and probably like a retracement and some from the move that started to the upside out of November into that resistance that we see. Like we'll rally out of November's trough into resistance and then turn around and decline, probably full retracement and some into another prominent trough in December. There's multiple failed attempts to break through key resistance near the December low. The December high forms after sideways rotation, a fast sudden move higher, and then more sideways rotation near the high for the month. And then the later part of December, a lot of volatility and a lot of price change covered. The Prince of Wands often a very difficult card to interpret because it's so volatile and so much price changes covered. So again, something we'll want to look at in more detail when we get closer in time to that. And then the sneak preview for 2025, we have a pop and drop on a multi-year scale, or excuse me, sneak preview for 2026, a pop and drop on a multi-year scale. And let me see if I can figure out, do we go higher? Are there higher highs in 2026 in comparison to the highs of 2025? Yes, there's higher highs in 2026. Really, the best thing to do, guys, is to compare this 2025 reading next to a multi-year reading, which again, I'll show you guys how to get that at the end of the video as well. There's also lower lows in 2026 in comparison to 2025, so be mindful of that. All right, so I'm going to give you one of the best trades that I see for the month, for the year of 2025. Then I'll show you guys how to get the total access subscription and or the multi-year reading. So stay tuned for that if those of you that are interested. Okay, so the resistance level. Yeah, this is a good one, guys. So there's like a dual trade here. There's a couple ways that you could play this, but again, you should really only follow this for entertainment purposes. Only trade with the live Discord trade alerts, live updated trading view charts. If you insist on trading, I'm going to give you chart behavior leading into the entry. If you don't see that chart behavior leading into the entry as expected, it's a failed trade. Don't enter. So March, an important technical price level at the March high on a multi-year scale. So that should be pretty easy to identify once we're near a March, like a highest high for March, and it's also at a multi-year price level that's important. We'll, should be able to to identify that pretty easily. It will be a brief peak that's easily missed with a decline from that technical price level through multiple support levels. A pretty sharp decline, one of the bigger declines of the year. So when we hit that resistance level, that key technical price level, you could call that entry signal to get into a short position and close out of that short position, most likely at a significant low or a lowest low thus far for the year in the later part of March, after a brief peak that's easily missed, followed by a decline through multiple supports. That's one way to play this price level, but more likely and probably a safer bet is on the way down. So we identify that technical price level, and then we have this brief peak at it that's easily missed, followed by decline through multiple supports. On the way down through multiple supports, you could buy partial long, because in theory, it's almost always the case with these type of situations. In theory, we're gonna this dark purple correlation is to the Princess of Swords. So in theory, we'll identify that price level, decline from it, and then return to it in the not too distant future. It'll either be on the cusp of March, April, or more likely it's going to be somewhere in mid to late April. And there's also a backup exit to close out of that long position as well. So we'll talk about it in just a moment. But a decline through multiple supports, sideways fluctuating decline preceding a rally in the early part of April. And then I would say, look, try to identify, again, I'll identify this as in the Discord when it's around that time. But try to identify when we've reached the bottom for April. You do that because we should see a sharp drop into it and then a rally along a diagonal trend line out of it. And it's likely to be in the later part of April. Hard to say, but what we're looking for is the revisiting of this key technical price level or close to that range somewhere within April, and that would be your exit to close out at the roughly the same price level as the price level that we declined from at the March high, right? And if you miss that opportunity, there's very likely an opportunity to close out at the May high, probably in early May. That's one of the best trades that I see for the year. Let me know what you think by hitting that like button. As always, make sure to follow that rule of karma. You guys know where to go. You know what to do. And if you don't, go check out the video on our YouTube homepage. It's super, super important. Don't be one of those people that doesn't follow this rule and ends up not reaping the rewards. Like, it's so easy to reap the rewards. Just do the right thing. Follow the rule of karma. All right, guys. So let me show you how to get that total access subscription. And right after I finish recording this public version, I'm going to go into the ARPA chart here on our TradingView, our live chart for ARPA, and we're going to look to identify entry and exit ellipses. We'll draw them on the chart for entry and exit into and out of that out of the trades, as well as probably we'll be able to identify timing of the highest highs and the lowest lows within a range, not an exact price. But all that stuff is part of the total access subscription. You also get access to our Discord for total access. You get with the total access subscription, you get access to the day-by-day, the monthly prediction, day-by-day chart behavior and highs and lows to the day for all of the tickers in the monthly access. You get the day trade info in the early access for SPY. And then you get week-by-week chart behavior as well as highs, lows, and all the trades that we expect to see throughout the year for total access. For all of the following, all of these crypto and ticker symbols here, all covered, live Discord trade alerts, right? And each one of these channels has a link to the live updated TradingView chart. So in real time, you can always look and see any notes that we've made or changes that we made to the chart. Don't expect those ellipses to never change, guys. That's not being dishonest. That's being responsible for the client, right? If my expectations change, I'll have to change the ellipse. Why would I not change it? That would lead people to lose money, right? So there are cases where it'll change, but usually we're on point, guys. The stuff's super, super helpful. So if you're interested in that, guys, you go to our website, Tarot for Traders. Go to our website, Tarot for Traders, and or stockmarketpsychic.com, and you click on click on or hover over order now, click on subscriptions. Total Access subscription gets you access to the 1 year reading paid version with our trade expectations and the timing of the highest highs and lowest lows for the year for every one of these tickers in crypto in the year of 2025. There's also some 2026s out there, and there's also a bunch of tickers in crypto that we've added to this list that have not been updated as of yet. The monthly access, you also get all of that as well. Day by day chart behavior, highs and lows to the day. Like I said, so Total Access subscription, $500 a month, $5,000 for the year. It's our premier subscription. Super undervalued. Now, if you just want the paid version of the Total Access of the ARPA reading, you can also go to Order Now, click on Custom Orders or Custom Readings, and it would be under 1 year report. If it's on the list, then you can click her and order it for $400. If it's a ticker or crypto that's not on the list, then it's $500. The one-time thing. And then let me show you that multi-year readings as well. The multi-year reading are one of our less pricey services. You can pick any one of these price range or these time ranges, a decade of 2020 to 29 through 2040 to 2049. 150 gets you year by year chart behavior. It's a great pair when you're already looking at on a 1 year reading. Having the multi-year reading is an extremely powerful tool. It helps with timing in so many different ways. It's not even funny. So hugely undervalued again. But with that said, guys, we're always looking to improve and update the system. There's likely, when you're watching this video throughout the year 2025, additional services that have come out at that time. And so thank you to everybody that goes ahead and does that. Much love and appreciation. Blessings again to all my angel investors. I'll see you guys on the next one.